Good morning, everybody. It is Friday, January 5th, 8:46 a.m., and we are here live for another market open. Thank you, everybody, for being here. We've got some breaking news this morning. Obviously, I know everyone here has seen their portfolio and likely seen that good old Palantir is down 4% as we start today. The stock right now at $15.54. We've got a lot to talk about why the stock is down. Since the morning, I've kind of been looking at the variety of reports that came out. Essentially, there is a downgrade by Jefferies analyst Brent Thill. So we're going to be talking about that, discussing why that downgrade happened. Ultimately, my thoughts on what price action might look like for the day. We are below $16. At the beginning of this week, we were at $16.07. Thought on Tuesday we would see $15.90, given we were 7 cents away from that $15 range. And we stayed above 15 for a long time. Even we hit $15.95 a couple times, but rebounded to 16. Now we're here at $15.52. On top of that, we've got a jobs report that's incredibly interesting to discuss. The unemployment rate in America is steady at 3.7%. We added more jobs than were expected. We actually added a lot more jobs than were expected. Is that bad for inflation? Maybe. Is that really good for the consumer being resilient? Yes. And so we've got to analyze kind of what does that mean for the broader equity markets, because the markets didn't really love the report, but they didn't hate the report. And so we got a lot to discuss in terms of what's going on in that report and how it's working out. We are streaming for the first time on X. So shout out to the 29 people that are here on X. Thank you for being here. If you do like consuming this stuff on X, then now it's on X. And I think I'll be able to see your comments here in the live chat as well. Brandon, Top Dasher, Brandon, Gift Magic, Brent, Voth, Eeyore was right, Ray, Sethi Roth, Paul, Victor Hernandez, Casey, Win, Patrick, Invisible Voices, Kite, Andy, Broccoli, Bob, James, Jeremy, Imnop, R. Lee, Mark, Benny, Tabor, Miami Ren, Joseph Viegas, Adrix Edix, Art of War. Dario says, good morning, everybody, even though it's almost 3 p.m. here. Shout out to the international viewers that are here. Vincent, James, Ty Gordon, James Lacey, Richard, Nicholas, Hand in Hand, Yao, Ty Gordon, Nick Piercy. All right, let's get into it, folks. We've got a lot to discuss. I think we're going to start off the stream with Palantir. That's the top headline news for the day. We're going to spend a good 10 minutes discussing what I've seen happen, why the stock is down, and then we'll get into the jobs report. Now, top level, before I even explain why everything's happening in regards to Palantir, as you can see in my voice, I'm not really that upset. And the reason I'm not that upset is because you know me. I'm a long-term shareholder when it comes to Palantir. I want to hold this puppy till I have kids, quite frankly. I mean, I really, really believe in this company far beyond normal beliefs. And it's because of the due diligence I've done. It's because I write a newsletter every single day. It's because I make videos on it. It's, obviously I am biased, but I also think I'm objectively biased because no matter how biased you want to call me, I've been saying 15 is coming since 21. I'm sorry. I hate to reiterate that, but you guys know this. You can watch every single morning open live stream for the past 2 months. I've been saying, look, I think 15 is fair value. Even when we were rising at 21 and no one wanted to hear 15 was fair value, 15 was fair value. It's just the nature of how the company is. Is there a premium attached above 15? Sure. But 15 is, I believe, fair value, and that's the price that I'm willing to pay. Now, unfortunately, the price has come down to that level, and the reason it came down to that level is not really because of anything fundamental. So, although it would be nice to buy it at 15, the reason it's down to 15 is kind of stupid. And so let's get into why that reason is happening and discuss a little bit more. So this is the main reason for why we're seeing the stock down below here in this $15 range. So here it is. And let me just say, while it's been at 15, you guys have been seeing, if you follow me on X, now that we're streaming on X, I have been making purchases, my Roth IRA at 1720, at 1613, 1650. So I bought probably call it 200 shares over the past like 3 weeks at these $15, $16 levels. But the big buys were, 1,000 shares, things like that. That is where I'm waiting for 15. And so we'll see if we get there, and I'll probably nibble around this range. But in general, that's sort of the price target that I'm looking at more deeply. All right. So the reason for Palantir downside today, we got a downgrade from Jefferies. Jefferies is where we got a downgrade. While we do believe the company has an AI technology advantage in the long term, we are concerned that the stock has rallied to unsustainable valuation levels, primarily on the back of AI euphoria and retail trading momentum with no monetization strategy. They have a price target of $13 for the stock. A couple other things that they said on this today, but that's their main point. Their main point is that it's AI hype and there's no real monetization strategy. They say we are still fundamental fans and believe that the company has the potential to gain share in an under-penetrated and large TAM, but think that concern over top-line growth will be the primary driver of stock performance over the next 12 months. While he noted that the AI story around Palantir is likely not done or likely overdone, Phil conceded, however, that the company offers a highly differentiated platform that companies can use their specific data and analytics needs. The key issue, though, is whether it can get out of its own way, as it has faced some execution problems in recent memory. He says Palantir has faced some execution issues over the past several quarters, with growth stalling in both its government and commercial businesses. We believe the key debate is focused on whether Palantir can solve its go-to-market problem and reaccelerate U.S. commercial growth, which is its largest opportunity ahead. Now, let me be very, very clear about this report that came out on Palantir's valuation. I mean, this is objectively how I'm analyzing this and why it actually is a really awesome opportunity for long-term shareholders. Brent is not making the argument that Palantir is not generative AI. Brent is not making the argument that Palantir doesn't have a differentiated product. Brent is not making the argument that Palantir's AIP is some hype product that is not differentiated from a Snowflake or a Databricks, or that Microsoft's going to eat their lunch. He's not making any of those arguments about the nature of the product and the actual AI-enabled enterprise suite of products that Palantir is offering. He is simply making an argument, which is tanked Palantir 4% today, around their go-to-market strategy. That is it. So Jefferies Brent Thill is making an argument. And by the way, this guy's been bearish on Palantir for a long time. So it's no surprise that he came out with this price target. It's not like Raymond James or anyone who's been bullish, or Mariana from Bank of America. This is someone who's been traditionally bearish on Palantir. And his concern has always been the nature of execution, the nature of their ability to maximize their sales distribution outreach to be able to grow. And honestly, he's not wrong on one main component. There was a massive premium given to Palantir with little to no growth. In fact, negative growth when we're talking about actual year-over-year growth, with Palantir declining to about 17%. And 2 quarters ago was at 13%, right? So his argument actually makes a lot of sense around their go-to-market strategy not being the best. Therefore, the multiple on the valuation should probably come down, because of course you're going to pay a multiple, but the multiple, if you're paying for little to no growth, is just ridiculous if you're buying Palantir at 19, 18 bucks. However, the fun part about this is that if you study the company, there is a go-to-market strategy that is starting to be unveiled, which is boot camps. And now this is where it comes down to fundamental DD. Do you believe that go-to-market strategy is working? Do you believe their bootcamp strategy is working? Do you believe that when they're able to close one of the largest home manufacturers in the United States within 90 days and get a $40 million deal from pilot to AIP signed contract, is that a sign of something that is working? Do you believe that their partnerships with Fujitsu and Plascred and Unicredit and all these different companies they've been working with, and the HISA organization in the past couple of weeks, do you believe that is a sign of the bootcamp strategy working? If you believe bootcamps are converting, we're getting a higher customer count, and the monetization of those customers will happen within the next 3 to 4 quarters, which we'll talk about his monetization concerns in a second, then I believe these are juicy prices. And the reason I believe those are juicy prices is because if the only concern Brent has is about their lack of a monetization, or their lack of a go-to-market, well, I believe go-to-market is being solved. That is my personal belief. And if a go-to-market is being solved, well, then wait a second, that's not something to be that concerned about, right? If a go-to-market is being strong and they're actually executing on a sales strategy, then his concern is a concern we've known for a long time, but that concern is not necessarily a concern that I should be super worried about. This is Brent Thill on TipRanks. He is ranked 8,317 out of 8,647 Wall Street analysts. Objectively, this guy fucking sucks. I mean, sorry, but that's sorry, Brent, if you're watching, you just suck, dude. You're really not a good analyst, but I'm giving you some credit here on the Palantir call, saying, yes, you are right. There is a bit of overvaluation because their go-to-market strategy is not defined. However, I believe their go-to-market strategy is becoming defined. And so to me, if we get a 4% decline and we get some juicy prices, I'd rather buy Palantir at 15 than 17, especially if I think their go-to-market is going to be solved, then I don't really think there's that much concern long-term. Now, granted, is there still an execution risk on the go-to-market? 1,000%. But from all the evidence I've seen, and this is all, I don't have any insider information. None of you know anything that I don't know. Everything I've seen publicly about them talking about their go-to-market shows to me that they are highly anticipating better conversion rates on their customers, and the wait times in terms of pilots have gone down from 6 months to about 90 days. Or in some instances, weeks with these bootcamp strategies. If that is the case, then that means there is going to be massive growth for Palantir, and we are going to get back to 30-40% growth over the next 2 years. The question is just when that happens, and if that doesn't happen soon, then maybe we get some juicier prices to anticipate that happening into the future. So from that perspective, look, it's a reasonable downgrade. I don't think it's a crazy downgrade. 13 is a little like, dude, if we get to 13, I think everyone should be loading up the truck. Personally, in my opinion, 13 is in this market with the S&P. Now, if the entire market has a downturn, then 13 seems a little different. But the entire market is still pretty inflated. So to see 13 is would be a nice price. Now, granted, look, at 17, 18, yeah, the multiple was high. The multiple was indeed high. You can't argue that the multiple wasn't high. The question becomes, how high does the multiple need to be given the growth rate? Remember, Palantir is not growing even at 20%. If that changes in Q4 and they start guiding for Q1 growth of upwards of 20%, the company has so much momentum, has so much liquidity. There's so many retail investors. There's so much institutional interest. There are so many ways. JP Morgan is having a healthcare conference I think next week. There are clients of Palantir that are presenting at that healthcare conference. And the core reason they're presenting at that healthcare conference, I was looking at one of the articles JP Morgan published, is because JP Morgan is excited that those clients like a Tampa Bay, like a HCA, like a Cleveland Clinic are bold enough, that is the exact verbatim they were using in this article, to work with a company like Palantir to be able to implement AI-enabled operational workflows throughout their enterprise. This is a real thing that is happening. That NHS contract is a real thing that is happening. Getting $250 million from the military 2 months ago to do AI-enabled research, that is a real thing that is happening. And so from that perspective, I am more bullish than ever on the company. Yeah, the growth sucks. So the question becomes, can we get enough shares before the growth starts to skyrocket? And how long will it take before the growth starts to skyrocket? Which is why I think this downgrade is not the worst downgrade in the world. It's not based on any fundamental reason around the technology. It is purely based on the go-to-market execution strategy, which we all know that they suck at sales because sales have not shown growth over the past 2 years. If that changes, which I have evidence to believe it's changing, and the only evidence I have is everything I've seen publicly about boot camps, then I think that it'll get a lot better in terms of the actual growth rate, which will help more in the valuation. So it's going to be pretty exciting to see what happens. That is the update on Palantir. Let me know if anyone has any questions in the chat. For those that are just joining, Brent Thill downgraded Palantir to $13 price target, and that would put us at about a sub $30 billion market cap, by the way. If we had 13, that would be at like a $28 billion market cap. I don't think we deserve to be a $28 billion market cap. If you look at Snowflake, where's Snowflake right now, by the way? As this downgrade is happening, Snowflake is at a $60 billion market cap. And, just like, again, there is a level of industry peers that are doing significantly better than Palantir in terms of their market cap. And that's because they're showing the growth. That's correct. The reason we're also excited about Palantir right now at 35 billion is probably going to come below 35 as the market opens. The reason we're so excited about Palantir is because there's a real product, and because there's a real product, when you attach that to a go-to-market strategy that works, you just have something that could probably become very, very big if they choose to execute. But also remember, that's the risk with investing in Palantir. You got to remember, there's always the risk in investing in a high-growth tech company when it's not high-growth tech is you're investing in the tech hoping for the high growth. Right. And this has happened many times before. This has happened with Tesla. They're a high growth tech company that wasn't growing at one point. This happened with Amazon. They're a high growth tech company that wasn't growing. This definitely happened with Microsoft. Oh my goodness. Until Satya Nadella took over, they were an amazing high growth tech company that wasn't actually growing. All of this stuff has happened in the past. It's not like this is unique to Palantir, right? So I don't want anyone to think, oh my God, Palantir is the only tech company in the world that is not growing. Like every tech company before they became a major tech company and were respected by Wall Street and were given the multiples they deserved, they were not. I mean, look at Apple. Apple's not fucking growing. Apple has a 31 PE and they're not growing, right? But they have a 31 PE, right? So it's just all of this happens throughout the life cycle and journey of a company. All of us are excited because we're at the beginning of this life cycle and journey for Palantir. And now it's just a question of, can they execute on this sales strategy? And do we get some juicy look, I'd rather buy at 15 versus 20, knowing that their sales and their growth has been bad, with the assumption that sales and growth will get better. I'd rather not touch it at 20, knowing that there's a massive execution risk. I believe that risk will be fulfilled. It will just take time and you have to be patient, but I'd rather have a margin of safety, which is all it means when you're getting a lower price. You're getting a better margin of safety. So if Brent Hill wants to tank the price 5% and give us a margin of safety for a long-term shareholder, I can't really argue with that, quite frankly. I actually don't think that's the worst thing in the world. And so it really depends on what it means for long-time shareholders. Now, here's another comment I just want to make before we get into the jobs report. What I said this on X today. What will be interesting about price action is if retail sells off their shares on the downgrade. I have personally seen, and this is anecdotal evidence, but I mean, take it for what it's worth, many retail investors entering into Palantir at $19 to $21 that had no idea what the company did. Like if you ask them what an ontology is, they would sound like Edwin on that debate where he would be like, I don't know, like they have no clue. But we're just excited for the run up and wanted AI exposure. Those same investors will now either be forced to actually learn about what they invested in or take their losses. My 2 cents, I'd rather they exit and create even more downside pressure to create even better opportunities for longs. Meaning, if you bought Palantir at 21 and 20 because you thought it was going to go to 30 and you were riding the AI hype and you had no idea what the company was doing, because quite frankly, if you're buying it at 21, I really don't think you understood the valuation, right? But if you just bought it for the hell of it, I'd rather you leave at 15 and create even more downside pressure on the stock and get us to 14, because I very likely buy at 14, right? I want to buy even at lower prices. And I want to flush out the people that don't know what the hell they're doing, that are just speculating, right? There's always going to be speculators, but quite frankly, if you just don't know what the company is, you probably shouldn't be in it, and you should get out the weekends and get opportunities for long-term investors that really want it. So make no mistake about it, there are a lot of retail investors who know nothing about Palantir. The volume alone on the stock signals how much liquidity exists. I mean, there's about 40 to 50 million shares traded daily, and these are not by people that know what an ontology is. Even the best Palantir investors struggle to explain what an ontology is, including myself. So I doubt that the average retail investors know how to do it. Vadim, my average cost on Palantir is 15. And so that's also why I've been saying, like, I like 15 and below, because if we, I'd rather not increase my average. I'd rather decrease my average from that perspective. So, ultimately, I believe that there is a lot of retail momentum in Palantir today that's either going to capitulate or that's either going to sell off, or they're going to double down and buy more. Maybe there's shorts are going to come in. The short report, the shorts have been about 5.9% of the float. It's gone down about 20% in the past 3 weeks. Maybe the shorts come back in. We'll see. Today's going to be really interesting price action on Palantir, because today is the day where we're going to see if this $15 level has any support to it or if it just completely falls out. It's also a Friday and the entire market's red. The market tends to be red on a Friday, so we might see a little bit of downside pressure from there, given it's a Friday as well. Okay. Someone says, is a $17 average good? A $17 average is not horrible in the long term. Even a $15 average right now is not amazing, given the growth. If Palantir was growing at 30%, 25% year over year, I think $15, $17 would be fine. Now, $15, $17 by 2030, I think it won't matter. If it's 15, 17, 18, 20, I don't think it'll matter. But in the short term, yeah, it does matter, because the growth is just not there. And so the margin of safety you have between 15 and 17 and 20 is hard. I think people who have a 12 and under average, those are the real ones that have a solid level of margin of safety. Those are the ones that can afford to average up. But if you're at 15, 16, 17, it's just hard to average up, man, because again, the growth is not there to justify the massive multiple. And by the way, for those that might get angry at me saying this, CodeStrap, who is someone who actually implements Foundry and AIP for clients, who works at PwC, he was on the Palantir Weekly podcast with us in December, last week of the last podcast of the year, December 2023. And he made the same argument I made, and he made it a bit more explicitly than me. He said, look, if we cannot actually have an NVIDIA type of quarter and grow, the street is not going to maintain this multiple, because the multiple is fucking stupid if you don't have the growth. It's just that simple. This is why insiders sold at $21.80. Again, as much as I love Palantir, there's a reason Alex Karp sold 800,000 shares at $21, because all of his financial advisors were like, yeah, the market's giving you liquidity. Get the fuck out and take some of this off the table, because you're probably not going to get this liquidity again until, the market re-rates the stock. It's just the nature of how things go. And so I think it's very obvious that the growth is not there. The growth will be there. And for that, if we can get shares at a juicier price until the growth is there, then I would be very happy for that as well. Okay, that's the update on Palantir. For those that are just joining, we got a price target to $13 by Jefferies, decline. That's why the stock is down about 3% in the pre-markets. Let's talk about the jobs report. We've got to talk about this jobs report, because this jobs report is juicy. I mean, it is very juicy, juicy, juicy. One could argue even juicier than Palantir at 1560, because the unemployment rate, folks, has not changed. We are stuck at a 3.7% unemployment rate. which I don't really know how the market's interpreting it. We'll talk about it in a second, but here's what we got. The U.S. economy added 216,000 jobs in December of 2023, more than a downwardly revised 173,000 in November, and well above the market forecast of 170,000. The market expected we were going to get 170,000 jobs. We added 46,000 more jobs than what the market expected. Employment continued to trend up in the government, about 52,000, leisure and hospitality, 40,000, healthcare, 38,000, social assistance, 21,000, construction, 17,000, and transportation and warehousing lost jobs at about 23,000 as well. Look, so the unemployment rate is continuing to stay very level-headed at 3.7%. We added 216,000 jobs. That was well above what the market expected. Ultimately, what does this mean for the macroeconomy? Well, I think it means two things. Number one, we are maintaining this 3.7% rate, which is incredibly important because no one wants to see us go to 4.55%. If we get to those higher levels of unemployment, then obviously that's not going to be the best, because if we get to those higher levels of unemployment, then the consumer is not going to be as resilient because they're not going to have a job. So they're not going to be able to buy everything. They're not going to be able to buy everything. Companies are going to lose their earnings. And then 2024 is just not going to be that fun. We can probably inch higher to 4.1%. So we have some room there, but staying at 3.7 is, again, continuing this Goldilocks zone of the consumer maintaining a job and maintaining their resilience against being able to spend in a rising economy. Now, the downside here, which I don't even know is exactly a downside, but it's something that I think the market's kind of worried about, is inflation. Okay, so the reason the market hated a lot of unemployment data over 2023 when we were adding like XYZ hundreds of thousands of jobs was because the market was like, okay, if everyone has a job, they're going to have money. If they have money, they're going to spend. If they're going to spend, inflation is not going to go away. So if we don't see unemployment rising, again, we're stuck at 3.7% as per this December jobs report, then does that signal to J-Powell that people have enough money and they're going to keep spending? And if they're going to keep spending, rates need to be higher for longer, or at least high for longer. And maybe we don't change rates, but we don't cut them, we don't raise them, because inflation is going to be stickier. I don't know. We are going to have to see in that December CPI data. From my understanding, there are a variety of things that are going to tank inflation in regards to shelter and energy. So we're seeing that as a positive sign. But if people continue to have a job, is that going to be bad for real inflation? My gut feeling is no, because I think there's a lot of other factors that are affecting inflation. That's inevitably going to come down. And we need that consumer to be resilient if we want the stock market to have any chance of actually maintaining its premium. But if that is a bad side for inflation, then this good news will actually be potentially bad news at the end of the day. And so we're going to see what happens. Mike says the jobs report is highly unreliable. For one, it doesn't account for the quality of jobs. It just counts for new payroll ads. I mean, that's true. The quality of jobs, it's a good point. Look, if the government added the most amount of jobs, right? The government added about 50,000 jobs. So from that perspective, 52,000. So from that perspective, if the government's adding a ton of jobs, that's not really private enterprises, employing a lot of people, having a lot of business activity. You want the private markets to be employing people, because that means that their businesses are doing well to the point where they need more employment, and that signals a sign of a good economy. So that is one argument to make, which is that, look, this unemployment rate is stable at 3.7, but the government's not going to continuously keep adding these many thousands of jobs, which means that unemployment rate will probably tick higher as the government starts to wane down on the amount of jobs that they're adding as well. October and November jobs were revised down a lot, so this report may also not be accurate. That is true. There is a little bit of a balancing here from October and November being revised down, while December comes up as well. So look, this jobs report is good. It is the market was already down before the jobs report came out, so it's not like the market was necessarily it's not like the market was like, oh my God, this is too much and it's going to hurt inflation or anything like that. We do have a market that is down in the pre-market. Let me pull up these equities right now. But in general, look, if you were looking for the bull case is that the job reports are good and people have jobs. And if people have jobs, people can spend, which is not the worst thing in the world. We got Kelly in the chat. Oh my goodness. Hi, good morning. I made it. Kelly, thank you for being here. We got Octavian said it yesterday, 210,000 jobs in a red day today, higher for longer. I don't know if it's higher for longer. It might be high for longer. I think that rate cut might be coming in May versus March, but I don't think it's going to necessarily be a rate increase. We'll view a clip from some bears in a little bit about why they think the rate hikes are coming. So we'll get their perspective, but I personally think it's just going to be high for long versus higher for longer. Chihan on Twitter, for those that are watching on X, thank you for being here. He says, where do you see Palantir in 5 years? Could it be the new Microsoft? I think it's a loaded question. I don't know if it's the new Microsoft. I do think if they can become the operating system for the enterprise, then obviously they have a resemblance of something that looks like what Microsoft was in the early days. You got to remember, Microsoft does have a consumer-facing side to their business. You know, $3 trillion company. Palantir is purely B2B, and they've got to do a lot of work penetrating massive industries and verticals before they even get to the chance of thinking that they could become a $200 billion company, much less a $1 trillion company and even a $3 trillion company, right? So it's going to take time, but obviously I'm very bullish on them because if you want to double out of Microsoft, that sucker's got to go to 6 trillion. You want to double out of Palantir, it's got to go to 70 billion. Do I think 70 billion is more likely than 6 trillion? Yeah. Do I think there's actually a path to get there? Yes. So in terms of purely returns, like I think the risk reward is obviously there, but Palantir is a lot more speculative because it's a smaller company and it's a much more younger company in the context of their, overall strategy in trying to capture the market. All right, so we talked about Palantir. We talked about the jobs report. For those that are just joining, again, Palantir got a 3% or 4% decline in the pre-markets because Jefferies put out a price target of $13. I talked about this for about 15 minutes if you rewind the market open. So if you want to get that, coverage, you can go there. Morgan's sends PE ratio equals 250. What is your opinion on that? Look, the PE ratio is ridiculous on Palantir, just like it was ridiculous on Amazon or Tesla in those early days because Palantir is barely profitable. So if you have a barely profitable company, you're going to get a ridiculous PE. That's the nature of what it is, along with the fact that you're not growing. If you're not growing, you're barely profitable, you're going to get a ridiculous PE. So I don't think that this downgrade is the worst downgrade in the world because I think it's very obvious that Palantir was overvalued at that $18, $19, $20 range. And as much as people want to hate saying that, like, there is a thing called valuation in economics. And like, I'm not the best valuation analyst, but at some level you can see, hey, this thing is trading a bit higher than it probably should be given the basic factors that we look at a stock, like the growth rate. So I think $15 is a lot more reasonable. Now 13, which is what Jeffrey says, I don't know if we're getting there. Maybe we do get there. If we do get there, I load up the boat. But I think 15 is pretty reasonable, and we'll see if we can end up getting there. Darkstar, good morning. General Wellness, good morning as well. Prove me wrong says, will Palantir ever have direct-to-consumer products? I personally think no, maybe, but they got to crack B2B first. If they crack B2B, then maybe we'll get there. Until then, I think it's hard to just imagine that they're going to easily build out a consumer product. But you never know. It's an innovative company. It's a company that doesn't have to acquire. Snowflake has made 4 acquisitions at the end of the day in 2023. So it's a company that, because of their lack of acquiring and innovative nature, you never know what type of products they build out for the consumer. Okay, so we talked about a bunch of things. Let's look at a bearish perspective going into 2024 for why we're going to get more rate hikes. Real quick before that, 10-year right now is actually ticking higher. So if we look at the 10-year, we are looking at 4.05%, folks. So let me pull this up and then let me actually pull up some equities and then we'll watch that video. 4.05% of the 10-year. The 10-year was not 4.05%. It was at 3.85, I think at the lowest just a week ago. Oh, I've also got some other data that I've got to show you guys. So we got the 10-year at 4.05. And then if you look at this is why you got to be following me on X. It's in the description. If you're not following me on X, I don't know what you're doing because you get these juicy market updates. Here we go. Money market funds as of this morning, as of yesterday, because this is January 5th. This is as of January 4th, have had their second consecutive week of increases with $78 billion entering into these money markets. So we've got $78 billion entering into these money markets. That is a money market total of about $5.97 trillion, which is basically $6 trillion in money markets. Now, the reason this is so interesting is because this is the second consecutive week of increases. For the past 2 weeks, or the first 2 weeks in December, we saw a decrease of $11 billion and then a decrease of $16 billion. So we saw a decrease of $35 billion from money market funds. And what it was signaling to the market was that, oh, that money is leaving the money market funds that are collecting 5.5% risk-free rate of return on their cash, and they're probably being deployed in something like the stock market. And we actually had evidence of that. Ironically, $35 billion left money market funds in the first 2 weeks of December, and $40 billion flowed into the S&P, which was the highest days of inflows since 1993. In like December 20th or something like that. So you had the same amount of money leaving money markets kind of going into the S&P. Obviously, it's not one-to-one correlated, but it was kind of like, obviously some money is leaving. Over the past 2 weeks, which means the last week of December and the first week of January, we've had $11 billion enter into money markets, and now we got $78 billion enter money markets. So basically $100 billion, all the money that we lost, including fresh new capital, came back into these money market funds, now having about $6 trillion in these funds. Why is this happening? I believe this is happening because in the first week of January and the last week of December, investors sold off their stocks to be able to capture their returns. I think that's very obvious. They wanted those returns, they needed those returns, and they kind of didn't want to pay capital gains tax in the year of 2023. So they took their profits. And as a result of taking their profits, then became the question, where do they allocate that capital? And the market's kind of a little, maybe I'll wait for a better dip. And so while they're waiting for that dip, they put that money into money market funds. It seems pretty obvious. It doesn't seem like anything substantial happened to take a ton of money out of the stock market and put it into money market funds, outside of the fact that people just took their profits, which reasonably you probably did need to take your profits going into 2024. And so nothing super concerning. Now, we'll see in the next couple weeks if that number gets higher and higher and higher. The one bull case that is, even though it's bearish that money market funds are getting higher for the stock market, is that there's a lot more money on the sidelines. So once that front run happens on rate cuts, or once that first rate cuts happens, you could reasonably assume if there's 7 trillion in money markets at some point, right? 6.3 trillion. A lot of that money is going to immediately flood into the broader equity markets. And when it floods into the broader equity markets, we should have a lot more liquidity at the end of the day. Cool. So that was some of the macro news. All right, let's pull up some of these equities and see how they're doing in the pre-markets. We got about 13 minutes until the stock market opens. All of us are here for that beautiful stock market. We got 13 minutes on this lovely, lovely Friday when it opens. And look, it's probably going to open a bit red because we got the S&P down about 0.32%, or 0.01% of the pre-market is down 0.32% yesterday, 467. Tom Lee put out a note that says if the S&P cannot stay above 465, then we are likely going to see a bit of a retrace. If we can hold above 465, then we can inch higher back to 4,800. But he says if we crack 465, then we're headed lower. So that is the key level to look at least if you believe in Fundstrat's macro analysis, that if we crack 465, which means we go lower than that, then we're obviously going to come lower. Bitcoin, we haven't even talked about Bitcoin this morning, 43,867. The Bitcoin stocks are down or flat in the pre-markets. CleanSpark down about 0.29%. Coinbase is down. Robinhood 1187, they're down. SoFi is down about 1.19% in the pre-market. Verizon is up 39.58. We're seeing some of those value stocks have a little bit more momentum. Coinbase is down about 1.41%. Marathon is down 2.4%. Riot is down 1.51%. The Bitcoin ETF approval is not confirmed. A lot of sources are saying that it's going to happen and that it's very likely to happen, but it's not actually confirmed yet. And until that actually gets confirmed, we are not going to know if that Bitcoin approval is happening yet. But a couple of things happened yesterday. Grayscale legal officers tweeted that he was filing out some forms that gave credence to the fact that it's going to be happening. Anthony Scaramucci, longtime crypto guy, he's saying it's done. Senior ETF analyst at Bloomberg says that he's getting note that a variety of ETFs are submitting their 19B4 forms and their S1 forms to the SEC, signaling that it's likely going to be announced either today or in the next week, and then it's going to literally be available for trading within the coming weeks. So there's a lot of momentum saying the SEC is definitely approving some of these ETFs, but it hasn't been official yet. And so I think that's why we're seeing Bitcoin stay at this $43,000, $44,000 range. As soon as it becomes official, hopefully we see that upside momentum on Bitcoin, just because more people are going to be happening to buy Bitcoin for those ETFs. But if we don't get it approved for the next coming weeks, I think we're probably going to see some downside here until we get clarity on the ETF. Adrix Edit says, are you buying PayPal? I do have a PayPal position. It's about $10,000. It is down 50%. So my PayPal position, down $5,000 on that. Look, PayPal is one of those companies where the stock is broken. The company is, in my opinion, not broken. I believe the market is very scared that there is a lot of more competitive dynamics for payments, and that's why they're scared, right? You got Cash App, you got Venmo, you got all that stuff. Even though PayPal owns Venmo, so that's not the best example. But there are Klarna. There's all these different buy now, pay later options. Affirm. In my opinion, 430 million people use PayPal. PayPal, if you look at if you just do basic DCFs, they don't have to grow, and their fair value is closer to like $95, and they could not grow for like the next couple of years, right? Like 0% growth. So I mean, like there is a lot of just pure valuation reasons to buy PayPal. The problem is you're going to be holding it for a while, right? It's going to take some time for that story to play out. Maybe if in the next couple quarters, Alex Chris is able to really show momentum on progress and transaction margins are able to get higher. But until then, PayPal is just going to be a dead stock. It's going to take some time, but it's a dead stock, in my opinion, that is ridiculously undervalued. And so it's going to take time for the story to play out. But if you're looking for something that I think is a double in the next 2 years, at least, then I think PayPal is one of your winners. Celsius at 56.65, up 0.8% right now. Netflix was there was some news on Netflix. They're trying to figure out how to monetize video games. So they've unveiled a ton of video games. Apparently the video games were just purely for retention. They haven't actually figured out a monetization strategy. I tried clicking on one of their video games. I didn't really get into it. I'm not really a gaming type of guy. But Netflix is trying to figure out a better strategy for monetization of their video games. Another thing that came out around Netflix was the Dave Chappelle special. I don't know if anyone watched that, but that was a big deal. Dave Chappelle hasn't done a special in about a couple of years now. And so he released it a couple of days ago. And so that's big news for Netflix. Maybe potentially see a little bit more momentum, not on the stock, but just, about people, because he's a big name that gets people excited when he puts out a special. Truist right now, $36.97 or $37 in the pre-market. KRE is down in the pre-market. Arc Innovation, $48.58 down in the pre-market. Snapchat down about 0.86% in the pre-market. Amazon, $144, up about 0.01% in the pre-market. Let's get a bearish perspective. Let's listen to the bears, why they think a rate hike is coming more likely than a rate cut going into 2024.
With our local market panel, StoneX Chief Market Strategist, Catherine Rooney Vera.
Context, given the things that we've seen the last couple of months in this market, given the disagreements that we're having even among friends in this type of market, I think what's more pertinent, Ryan, and I couldn't see this 3 or 4 weeks ago, is I'm starting to see the negative catalysts formulate. Surprise, surprise, that's my view. I will continue to stay with probably great rebuke and great consternation.
So you're not changing your view. And listen, people come at you, I know.
No.
And the viewers, all due respect to everybody, they think everybody's going to be right all the time. They're not. If you find somebody that is, let me know. I'd love to interview them and poke holes in their story.
Exactly.
So you've been negative and you've been wrong. But what are you seeing now, Greg, that does worry you a little more?
Right. And so when you look back at 2023, it's important to identify why you were wrong. And so I think I and others were wrong because we didn't see not only the stimulus and how it would support the consumer, but we didn't see how the great refinance would position companies to resist the impact of that historic rate hike. But all of that has limited runway. What I think now is the problem is that the Fed they have an issue. And so while the market has decided that their rate hiking is over, remember, I continue to say, again, to great consternation, that I think it's more likely that we see a hike than a cut in the first quarter.
Wow. Going against Catherine. I mean, Greg's out there just going against the grain. What is your view? Are we going to have
So the reason he's saying this right now, right, and the reason he's saying there's likely going to be a hike, we got about 7 minutes until the market open, is ultimately his argument is that there is a re-rating, not in terms of not just on valuations, but also on corporate debt that is being financed, and that refinancing of that debt, along with commercial real estate, is going to be at some higher prices. And because that's going to be re-rated at higher prices and that debt's going to be refinanced, there's likely going to be a little bit more of pressure on the Fed to potentially raise these rates. Now, I think he's wrong about that because I think the Fed actually has pressure to cut those rates if there's going to be that much refinancing happening, along with the fact that I don't think Gregory Branch, that's his name, really takes into account the inflation story. Whenever he makes this argument, it never really takes into account how dramatically inflation is declining and how we're likely going to see maybe even close to 2% inflation by 2024. If that's the case, you can't have a federal funds rate at 6%. Like, it just doesn't make sense. At that point, you're trying to induce a recession for no reason. So you either believe it or you don't believe it, but I don't necessarily think he's correct on that argument on the rate hike. I think we could definitely have a pause. I think we could definitely not have a cut going into March. A hike is like, if there's a hike, we got a lot of issues. But I don't think there would be necessarily a hike. Thank you, everybody, for joining. Top headline news on the day. Palantir has been downgraded by Jefferies analyst Brent Thill. Phil, let me just say it. Let me just show you it one more time. And the downgrade is to a $13 price target from $18. They are holding an underperform on the stock, downgraded from a hold. Their belief on Palantir stock is that the AI element of it is a bit overhyped and retail frenzy has push the stock higher. Now, one thing to remember again about this downgrade, that last sentence right here, we believe the key debate is focused on whether Palantir can solve its go-to-market problem and reaccelerate U.S. commercial growth, which is its largest growth opportunity ahead. Remember, U.S. commercial growth is already growing at above 30% year over year. And if you take out SPACs, it's closer to 52%. So along with this bear report that came out, it's not really accurate in the context of U.S. commercial growth. U.S. commercial growth is growing very well. International commercial growth, international government growth, and U.S. government growth is definitely not growing that well. So even the report itself, I mean, I wish he had focused on other elements of the business because U.S. commercial is growing phenomenally, quite frankly. U.S. commercial is actually great. The other parts of the business are not that great. So in general, this bear report, for those that are just joining, is not about Palantir's product. It's not about Palantir's AI moat. It's not about the differentiating variables that AIP has in comparison to the other large language model platforms that are trying to enable AI and make it operational throughout the enterprise. The only points that Brent Thill is making for why he's downgrading the stock to a sub $30 billion market cap is their go-to-market strategy. And that's actually not unreasonable. Objectively speaking, it's totally reasonable. Do I think $13 is reasonable? Probably not. But in general, his claims that their go-to-market is not correct yet and they need to fix it, it's not unreasonable. The question just becomes, at what price does that become reasonable to the market? And today's going to be an exciting market open, because maybe it becomes reasonable at 1560. Maybe it becomes reasonable at 15. Maybe it becomes reasonable at 1490. Maybe it becomes reasonable at 16 and the market bounces right back and that dip gets eaten up immediately as soon as the market opens. I don't know. We're going to see. That's why it's fun to have a market open every single day. And that's why I cry on the days where the market's not open, because my life purpose is gone. But nonetheless, it's really, really exciting to see how the market's going to taste it. And we will, ultimately see where the market decides to rate Palantir. Okay, what else do we have right here? We got about 4 minutes until the market opens. Let me just pull this up. A couple of things I want to look at. Let's go to NVIDIA right now. NVIDIA has price targets across the board at 650 on the street right now at 483. NVIDIA has not really declined that dramatically starting the year. It's actually been one of the Mag 7 that's been pretty green. Apple as well has been in contrary to NVIDIA. NVIDIA has been green. Apple has been red. Apple now down another 0.22% in the pre-market. Barclays has a price target on Apple about 160. Remember, a lot of liquidity leaving Apple is actually really interesting, because Apple is one of those stocks that's owned by pretty much everybody, right? So when you've got $120 billion of market cap leaving Apple, the question becomes, where does that market cap go? Or where does that investor interest go if they take it out of Apple? And, maybe it goes into the indices. Maybe it goes into some of the more highly speculative names like a SoFi, like a Palantir, or maybe it goes into money markets. But if it's leaving Apple, it's likely going somewhere else. And the question becomes, where does it go? Tesla at 237 in the pre-markets. I've talked to a lot of people over the past couple of days that are buying the dip on Tesla. Kathy Wood has obviously been buying the dip. She sold a bunch of Coinbase yesterday. She didn't buy any more Tesla, but she bought 105,000 shares a couple of days ago. Tesla's becoming, it's the street. It's really funny because when you look at Tesla's chart, it's the same price it was back in 2021. They've 3x their revenues, but the market is just not excited at all about Tesla right now. And that January 24th earnings call is going to be incredibly important to determine, where's the future of this company. I think that earnings is going to be good because their input costs have come down, inflation has come down, so their margins should have bottomed and should be starting to reaccelerate, which is what the street really cares about when it comes to Tesla. Elon Musk tweeted yesterday, most people make the mistake of thinking Tesla is a car company when in reality it is a robotics and AI company. Gary Black tweeted underneath him, I don't think people are making that mistake given it's trading at 61 times forward earnings. So you've got a little debate going on. Elon saying, look, I'm building like a crazy tech company that is super futuristic and everyone's thinking it's a car company. And then you got Gary Black saying, well, the PE is kind of high, so I don't think people are just thinking it's a car company. And I think that is always the existential debate that exists with Tesla at the end of the day, right? Is it a car company or is it not a company? We got Sue in the chat saying NVIDIA is my favorite company. I mean, look, NVIDIA is incredibly exciting. And if they can keep that growth rate, it's going to be fun to see what ends up happening with NVIDIA. Coinbase right now, 152 down 1.19%. Bitcoin, 43,755. We got about 30 seconds until this market opens on a Friday. Thank you all for being here with me today. Thank you to the 50 people here on X. We are officially live streaming on X. So now we're doing X and YouTube. And today is going to be interesting because we got Palantir down, we got the Bitcoin stocks down, we got the S&P trying to hold that 465 level, and we're going to find out how the market decides to treat all of these equities and, as a byproduct, all of our capital in these equities. Ladies and gentlemen, 9:30 a.m., January 5th, fourth market open of the year. The stock market is now open. Wake your ass up. Here we go. Here we go. It is time. All right, let's run through it. MicroStrategy down 1.56%. Truist down 0.34%. We've got KRE, Regional Banking ETF, down 0.72%. Let's go to Palantir. What's going to happen? Oh, wow. Look at that. 1590 freaking 2. Look at that. It rebounded. Oh my. That was a heavy rebound. 15 I mean, I got to hold my breath. Obviously we got it's 30 seconds that the market opened, but goodness. That was a nice rebound from 1563 to 1590. We went from being down 4% to being down 2%. There were a lot of buyers, evidently, with orders ready to go as soon as the market opened, waiting to be filled at that 1560 range. Right now, market cap of 34 billion. So there you go, folks. 1594 on Palantir, down 2% of the day. We've got a long time until the market closes, but so far, if the early action is any indication, there were plenty of buyers with their dollars ready to buy Palantir shares waiting in this $15 range. 1584 right now, down about 2.4%. We'll check on that in a second, but it is up as soon as the market opens versus continuing to go to the downside. All right, we got Bitcoin 43,795. CleanSpark down about 2.4%. This is one of those Bitcoin stocks. It is down today. SoFi down another 2.63%. Goodness gracious, SoFi has been down. SoFi has been down a lot this week. SoFi has been down almost 20% this week. So SoFi is down. What's going on with NVIDIA? NVIDIA's up right now. NVIDIA, look at that, up 1.4%. NVIDIA 486. Look at that green juicy candle on NVIDIA. So we got NVIDIA that is green right now. We got Apple that is also a bit green right now as well as the market opens. So we got Apple that's green. We got NVIDIA that's green. What else? We got Google is green. Amazon is green. Max 7 turning a little green today. Marathon, Riot, Coinbase, they're all down. Marathon down 5%. Riot down 5%. Coinbase down about 1.35%. Tesla's green, down a little bit, 0.779%, 236. Verizon turns red, down about 0.06%. DNA, Ginkgo Bioworks, that is red, down about 3.53%. Enphase, 1.59%. Enphase went from 137 at the beginning of the week down to 116. For today, Bank of America is green. Toyota is green. XLF, this is the financial sector. We've got earnings for finance companies next week. That is green. We got Meta, 347. Meta is also green as well. Big tech is green today. It's kind of interesting. Kind of the money's rotating back into big tech. Almost all of big tech is green outside of Tesla. You got Palantir at 1593. Palantir's trying to make a run back at that $16 level. Wow. You've got plenty of buyers on Palantir. On Palantir at these levels. Let me actually pull up Palantir as well. I want to look at the order book that we've got on Palantir. The biggest, wow, yeah. I mean, I'm looking at the order book right now. The biggest wall we have is about 8,000 shares at 1628. But from there, it's just kind of basic 2,000-3,000 shares at the $16 range. You've got plenty of people ready to buy at this 15.90. Oh, there you go, 16. Look at that. Amazing recovery from Palantir to 16. Absolutely incredible recovery from Palantir to 16. That's a hell of a job. I mean, that is a hell of a job for Palantir. Hell of a job for Palantir. We got PayPal almost green. Sue said she sold Meta too early, sold it at 290. Look, based on your average, Sue, it was a good sell. I mean, Meta at 350 is pretty crazy. The fact that it got to 290 was also amazing. So not a bad sell at all. Palantir at 6. Let's look at Snowflake real quick. Snowflake 188. So Snowflake's green. Snowflake continuing to have a $62 billion market cap because I guess the market is, they're a fan of winter or something to give Snowflake this much of a market cap. Palantir struggling to maintain a $35 billion market cap, but still $16. Look at that price action. People were ready to buy. That is absolutely incredible. People were ready to buy. S&P is green. PayPal's green. NVIDIA's green. Apple's green. NVIDIA up 1% of the day. That's not easy to do. That's amazing. Disney is flat, but it was green just a moment ago. Amazon is green. Google's green. Amazon, Google, NVIDIA, Apple, and let's see, Microsoft are green. Tesla's the only one that's red. Wow. Tesla's the only one out of the big 7 that are red today. That's incredible. CleanSpark is down. QQQ is up on the day. CleanSpark down about 2%. SoFi down about 2%. They're down almost 18% for the week. Enphase again at 117. Arc Innovation 48.59. Snapchat $16. Opendoor $3.90. Alibaba down about 1%, 73.88 as well. But I think the story of the day, folks, is that Palantir was down 4% and now it's barely down 1% as the market opens. Absolutely incredible. Absolutely incredible. You got Nick Piercy. I bought 500 more shares of Palantir at 1550. That's not a bad buy. Not a bad buy at all. Average $11, 2,200 shares. Amazing average as well. Look, this is not bad. We still got a lot of hours to go, and we'll see, what happens. But so far, there's been buy-side pressure on Palantir. Maybe even some institutions were like, all right, 1560 was what we were waiting for, and now we're getting into it. The one thing to remember about Palantir as well is that They are at the center of AI when it comes to the market exposure. So let me play this clip as well from Dan Ives. He was on Bloomberg yesterday, and he actually made a very interesting point around where Palantir sits in regards to how he listens to clients talk about Palantir. And this is another reason why it could be quote unquote overvalued for a while, but it's going to maintain momentum at some point if the growth can keep up. And if the growth really accelerates, we're going to have a really interesting story, simply because you're going to see broader excitement from the ecosystem of investors that want to get coverage to Palantir or to AI. And as a proxy, that would be Palantir. So let me share this clip right here. It's about 58 seconds of him talking about Palantir.
So the messy of AI.
The messy of AI.
I'm not a big soccer guy, but I feel like you're saying something positive. Let me ask you about it was a monster 2023 for Dr. Alex Karp and that crew at Palantir. But you say stick with it. It's still a buy in 2024.
The best pure play.
Why do you say that? Then?
Because from the work that we do from a use case perspective, they're the first call. In other words, everyone focused on government, what they've done there, maybe some of the controversies. The reality is that they've leveraged that government expertise into enterprise. You look at AI.
So you see the commercial just keep on rolling.
Right now, you don't see a major AI deployment where Microsoft, Palantir are not at least tip of the tongue in terms of some of these use cases. And that's our view. Our view is some will say Palantir is expensive, it's hype. This year they prove it. And I think that's the key as this all plays out for what I continue to view as stock that could ultimately double over the next 12 to 18 months.
Look, I don't think Dan Ives is BSing there. I think his argument is very sound. Dan Ives, when he was on my channel, by the way, he even said that this was back in early December or late November. Him and his team were flying out to Palo Alto, just like days after he was on my channel, to go speak with the people at Palantir and see some of the stuff they're doing when it comes to AI. He actually is on the ground floor talking to the people that are procuring Palantir software. And notice the thing he said here. When he's talking to these people, there are two names that come up that are at least part of the initial conversation before you begin your software procurement: Microsoft and Palantir. Now, look, maybe Palantir is not winning all those deals. Most likely Palantir is not winning all those deals. But the fact that they're included in the conversation, it's kind of like when I got waitlisted from Harvard. So like you can get rejected or waitlisted or accepted into a university. I got waitlisted, which means Harvard was like, look, we don't really want you yet, but we're going to take a second look at your application. They took a second look at my application, and then they were like, all right, get the fuck out of here. You're not getting into Harvard. But Palantir is basically being waitlisted in some of these deals in comparison to some of the bigger names. And I think Palantir is a little bit better than me when it comes into getting into Harvard, metaphorically, and they're going to land some of those deals. And so from that perspective, if you're even in the running to be in a Harvard or to be, procured for a $10, $15 million deal, and we know Palantir has been able to really secure these deals, right? Given some of the growth that we've seen in Q3 and the boot camps, then that means that they are at the center of AI. And what that means for the stock, what that translates to in stock terms, is that means investors want the stock because it's at the intersection of AI. And if it's at the intersection of AI at some level, investors are going to get more excited about it. Right now, Palantir is $16.01. It's down about 1.48% on the day. It could fall back to the 15s. We'll see what happens. But so far, there is the buy side pressure on Palantir. S&P is green somehow. Did not expect S&P to be green. For those that are just joining the jobs report, we have unemployment that is still at 3.7% in the United States of America. We added 46,000 more jobs than expected, which means the consumer is indeed strong. We have enough jobs for enough people. We are prospering as a country. The problem is how much is that going to infect inflation? And I think that is going to be the debate over the next couple months, which will either lead to a March cut or a delayed May cut. But so far, the S&P is fine with it. The S&P is like, you know what? We don't really care about inflation from jobs. We think that the jobs report is good for the economy. Inflation's coming down. That's the Goldilocks zone. Inflation comes down, growth sustains itself, and we got a hell of an economy in 2024. And I think Jay Powell goes down as the greatest Fed chair of all time. If Jay Powell gets us through the printing of $7 trillion and 10% inflation, highest inflation we've seen in 40 years, by raising rates to 5.5 within 12 months, and then slowly cutting those rates to get to the point where we avoid a recession, have a soft landing, unemployment stays stable, growth continues to accelerate, and inflation comes down at the same time, he will be the greatest Fed chair of all time. It is that simple. But can he do it? That is the question. Can he actually do it? If he does do it, then he pulls it off. He 1,000% pulls it off. Any thoughts on Microsoft's new AI key on their new keyboards? Microsoft, I did hear about this. They're trying to make Copilot's part of your literal typing experience. So this AI shit is real. It's very real. I have no opinion on it. I haven't used the keyboard, but I would imagine that keyboard is going to be, pretty cool if you can type, if you can press certain buttons, and those buttons ultimately lead to better operational efficiency on as a consumer using your laptop. So sounds really cool. We'll just have to see what it looks like when we use it in the real world. Okay, so we talked about a bunch of those things. We talked about the macro. US 10-year still at 4.1%. We talked about the rate hikes potentially coming up. At least that's what Gregory Branch thinks. Let's talk about something that's also very interesting, which is Apple. Apple is in a unique spot right now. I want to pull up some analysis on Apple right now, primarily because this stock has been dead over the past couple of days. Apple's green today, at least. Where's Apple right now? Apple 182 up 1.82%. Here's some analysis on, where Apple is in its life cycle and if it really is something we want to own. Actually, I'm going to actually pull up a better video. I'm going to actually pull up our boy Dan Ives talking about Apple more, since I think his analysis was a little bit better on this. So his argument is Apple hits $4 trillion in 2024. He still believes it's going to happen. Let's hear what he has to say a little bit on this, and then we'll move on from there.
A year ago, many of the haters were saying the same thing. Apple's going a lot lower. This is going to be, and then the stock's up 50% because they continue to underestimate Cook and Cupertino. You're talking about the golden install base, 250 million iPhones right now, a window of an upgrade opportunity. We spent a lot of time in Asia, and I'm telling you right now, we are not seeing any sort of major cuts from the supply chain. Now, I'm not saying that this is roses and rainbows in China, but they are holding their own, gaining share. And I think this is a get out the popcorn moment as the stock sells off yet again. And I think ultimately a year from now, $4 trillion market cap.
And the watch issue, non-issue, or do you think it is something that is going to provide a little rockiness here?
Look, I think from a revenue perspective, it's really breadcrumbs. Now, I think it does speak to patent issues that they're going to run more and more into from a healthcare perspective. But again, if you look at where this is all heading, the innovation, you talk about AI, I believe they continue to play chess, others play checkers. This is about an AI app store we expect to get announced over the next year. That's going to be more.
Wait, what is an AI app store?
So there's going to be a separate. Now it starts with Vision Pro from a form factor. Now many of you are 3,500. It's not going. It's all about, and Josh knows as well. It's about developers. This is just setting the stage for what this is. The new form factor is going to look like next 2-3 years. Developers are the key. They're going to be building more and more AI apps, from fitness to content to health, that are going to be on the App Store. That's really going to be Apple's opportunity to further increase that services business. Services is a key of the re-rating that we are seeing in Apple. I think you go back a few years ago, 200 billion. Today, we think it's worth 1.4 to 1.5 trillion. That is the key to where I believe this narrative is going to change over the next 6 to 9 months.
And you don't see that, because just stick with that, faster growth, higher margin services story. Some of the skeptics I know, part of their downgrade was, we think that's decelerating. You don't see that.
Sure, many bears, they never thought Apple would hit $1 trillion, $1.5 trillion, $2 trillion. So the point is, like, the haters will continue to hate. They view it as a hardware company. We view it as disruptive tech in terms of the install base. Services, it's a teenager type of growth now. You look at the margin, what's happened there. iPhone's going to grow again, even when you take out currency. China is growing. And I think as this plays out, 225, 230 million units. And if that happens, I think many of the bears are going to be looking at this period like, how was I wrong yet again in Apple?
Everyone here is commenting on his shirts. Dan Ives came on my channel because I have some interesting shirts as well. He was like, Amit, you need to start a shirt brand. And I was like, you need to start a shirt brand. He was like, no, you need to start a shirt brand. So we'll see what happens in the future. Maybe we start some shirt brands here. And I love the explosive, fun shirts on Wall Street. It makes Wall Street more fun versus, constantly being just a suit. Look, I think Dan Ives' argument makes a lot of sense. The only problem here is that I think if that services business cannot expand to the level which he thinks it can expand to, or Vision Pro can expand in terms of growth, then again, dude, this phone, I'm just not buying another phone. It's an amazing phone. I'm going to have this phone for years. I just bought this MacBook. It's amazing. Hopefully I don't need another computer for 5 years. I mean, this MacBook is absolutely incredible. One of the best computers I've ever used. I would imagine I don't need another one for the next 5 years, right? So it's hard for me to imagine they keep selling massive amounts of hardware, or at least a growing amount of inventory of hardware. They're going to keep selling hardware, but just like massive amounts. And so from that perspective, you're paying a lot for something that's not growing. So services has to grow. And that is going to be the risk. Does services grow or does it not grow? All right, let's get back into some of these equities and see what we've got going on here. Palantir continuing to be the Messi of AI, as Dan Ives calls it. What do we got on Palantir? We got $16.04, folks. So let me know if anyone bought any in the $15 range. If I actually transferred some money from my Bank of America into Robinhood today, just on the idea that I was going to be buying some more Palantir. But look, we got back to $16. It's not bad at all. It's not, but we got a long way to go. We got a long day. We'll see if it can hold this level. But it's at 1601. It bounced up from 1560 up to 16. We did not see it necessarily come down yet. Google 138, Amazon 145. All of big tech is green, including PayPal, even though PayPal's not big tech, but you know my point. Except for Tesla. Tesla is red, 236, down 0.74%. I think the street is just like annoyed of Tesla right now because they're not either seeing the automotive margins growth or they're not seeing FSD yet or whatever. What would be the craziest thing is if in the January call, Elon says like FSD is ready to go. That would be crazy. Probably not going to happen. But if it did happen, I think it would be pretty crazy. Bitcoin, 43,656. You got the Bitcoin stocks that are down. CleanSpark down 4%. SoFi down 1.96%. Robin at 1190. Marathon down 6.8%. Oh boy, you got Riot down 5.36%. You've definitely got some declines here on some of these crypto stocks right now. Walgreens, they cut their dividend for the first time in 47 years in terms of they were always increasing it. Yesterday was the day they cut it from 48 cents to 25 cents. They're down another 1.5% after being down about 7% yesterday. So we got Walgreens that is down as well. SoFi 826. Rivian continuing to be down. Rivian now under $20. Robin at 1192. Hut 8 Mining or Verizon 3965. Celsius 5642. Netflix 477. Rocket Lab 546. This one's recovered a little bit. It was down just at $5. Now it's up a little bit, but still down for the day. Meta 350. Zux continues to maintain this 350 level. I also did make an announcement yesterday on Twitter. I have deleted Instagram off my phone. So, yeah, Meta lost me as a customer. And let me know in the chat if anyone still uses Instagram. The reason I did it is because I was scrolling through it yesterday and I realized I was looking at my high school and college acquaintances' Instagram stories and I don't care about them anymore. Like genuinely, I just don't care about, like, I could care less about them. And I know that sounds harsh, but like you only have so much, mental space in your brain. And I was like, why do I care about Jessica from freshman year? Like at freshman year, I wanted to like make out with Jessica, but now I don't care about Jessica. And by sophomore year, I probably did end up making out with Jessica, but now I don't care about Jessica. And so if I don't care about Jessica, why am I looking at her Instagram story? Why do I care that she's at the gym and she's, drinking Celsius? Like, do I really care? Probably not. Right. And then I started scrolling through some reels and I was like, dude, I'm literally just giving Facebook attention for viewing nonsense. If I'm going to be consuming content, I want it to be finance content or I want to be reading articles. Like I want to be expanding my knowledge repository so the LLM of Amit becomes even better and better on these streams. And Instagram wasn't doing that. So I got rid of Instagram. Ray says because Jessica posts thirst traps. Okay, that's probably, that's a good argument. But nonetheless, I had to get off of it. But nonetheless, Meta got 50 million downloads on Instagram in November. So it's not like they're going to miss me. But I did make the decision that I got to make my information diet a little better. And so we got rid of Meta, but Meta's still up on the day. Truist 37.10, not bad. Price action on Truist. What do we have? Moderna 109, it's up 1%. Dollar General's up 0.27%. Nike up 0.25%. Pfizer is down about 0.09% of the day. Palantir under $16 right now, but $15.96. Not too bad at all for Palantir. All right, folks. I believe that's it for me. Damn, Jessica drinks Celsius. Might be time to start a position. You guys know how I feel about Celsius. I think it's fundamentally un-American because I don't believe in the metric system. So, I can't invest in Celsius just for I am a proud American, and so I can't invest in Celsius for those reasons. But for those that hate America, you can choose to invest in Celsius. Let's do word of the day, and we'll end it out. We do have a market close today. We still do the market close. We've been doing it every day in the month of January, so the market close will happen. I'll see you guys at 3:45 p.m. on this Friday, and we'll end out your Friday with me on the market close. Okay, here's the word of the day. This is a really weird word. Nigh. Near in space, time, or relation. Have you ever heard of this word? I've never heard of this word. With each passing day, the end of the week draws nigh and the weekend approaches. As the storm grew nigh, the sound of thunder grew louder. Dude, I've never heard this word ever. Has anyone heard this word ever? Like, I've never heard of nigh. This is why we do the word of the day, because we want to use these words and enhance our vocabulary so that we sound smarter in different situations. And every time you use one of these words, you can remember I learned that word from Amit. So it's always this way I'm in your subconscious. So that's why I do this. That's why I need to do this. But nigh, near in space, time, or relation. All right. Well, Palantir is nigh 16, even though it was below 16. So not too bad for Palantir in terms of its price action. Bill Nye, the science guy. Yes, there you go. Bill Nye, the science guy. Palantir right now 1604 as we close it out. Where's Robinhood? Robinhood 1189, S&P at 468. It's green, and then Palantir is 1602 right now. All right, that's it for me, folks. I will see you guys at 3:45 p.m. We do have Palantir Weekly tonight. We have our headline for Palantir Weekly. We got a nice little downgrade, so we'll be discussing that. We've got a bunch of other things to discuss, and we'll keep going from there. Thank you so much for joining on the Market Open every single day in the month of January, the past 4 days. Thank you so much for those who are joining on X, since we're now live streaming on X. Thank you for everyone who joins us on the Market Close. Thank you for everyone who's been supporting all the different podcasts and streams we've started this year. And let's keep it running and keep going through, keep trying to kill January. All right, that's it. Thank you, everybody. Have a good one. I will see you later today at 3:45 p.m. Bye-bye.